Welcome back. Now, Blue Label is making a comeback. This as a major restructuring process is underway at the group. And while its top line declined by 4% during its annual period, the bottom line grew by over sixfold. But despite the improvement, a dividend has not been declared. Company's joint CEO, Brett Levy, joins us for greater perspective on the performance. Brett, thanks so much for your time this afternoon. And just reflecting on, the year that was, Blue got a big boost following the reversal of an impairment recorded against its investment in Cell C. But even when excluding that reversal, earnings still look good. Is this proof that the turnaround strategy is taking shape?
Afternoon. Thank you for having me. Yeah, I think just as a general statement, I think we had a really good year, and I think the numbers will speak for itself once we unpack them, both from a Blue Label perspective and a Cell C. I mean, if you just look at Blue Label's numbers and you strip out, obviously, all the erroneous numbers that are coming through on Cell C on the deferred tax, Blue Label itself in its core trading was up 38%, so really a good year. And Cell C itself, a massive turnaround. So I think for most of it, really pleased with the last 12 months.
And talk to me about the pressure that you were seeing in the top line.
The top line is actually no pressure, and just to explain that, all our new products are actually, we act as the agent and not the principal. So in essence, all new products are in a pinless world. So if you do prepaid electricity, you would know that's pinless, where we actually don't take over the stock. So what we've tried to explain to the market over the years is you're actually going to see our revenue decline, where actually revenue is only going to meet gross profit. That's where it's going to end up. But the actual revenue that went through the books of Blue Label was 96 billion rand. So we were up 7% in revenue. So we actually had a phenomenal year on the revenue line. The problem is all the new products are no longer what they used to be, what we called pin products. They're now pinless. So as I said, you'll actually see that 14 billion eventually come all the way down to match our GP line. There'll be no more revenue line. Revenue and GP will be the same.
All right. Thanks for walking us through that. Now, let's chat about that prepaid business even further. Growth there also supporting margin growth over the past financial year.
Yeah. Different sectors are showing good growth, not all of them. So if you take the telco sector, for example, a very nice market, but consistent. So there's no extra margin coming through that side. Electricity, actually, margin decline on the electricity side. But if you ever look at all our other products that are coming through, specifically gaming being gambling, not actual gaming as in games, that industry has shot the lights out. I mean, they have growth of over 40% year on year. So the margins from that better, margins from our ticketing, and then margin from our own products. So we have 3 unique products to us. One is called Unipin, which covers electricity across the whole. One is called Ringers, which covers telcos across the board. And one is called Blue Voucher, which is all our online, including gaming. So I guess in short, the answer to your question is we need to do more bundled products, so more unique products to Blue Label, and that will enhance the actual margin, because if you do single products, the margin is decreasing.
Okay, and let's talk about that further. Is that now part of that restructuring plan that's in process? Talk to me about where the group is at with that process. I know that you are also mulling a name change.
Yeah, this is quite an exciting time for us. So the name change becomes official around the 8th of September. That's when it becomes official on the JSE and where it is. And really what we wanted to do was drop the telcos. And the reason we wanted to drop the telcos is because we're not a telecoms company. Of course, we own Cell C, and we can have a different chat on what we do with Cell C into the future. But we're really about distribution. We're really about product, financial services, AR data, and everything else that goes with this. So we've dropped the word telecoms to Blue Label Unlimited Group. We'll drop the G, and actually will be known as Blue Label Unlimited, which the tagline is BLU, which actually has been our tagline all the years. So wherever we go as BLU. And we want to be known as Blue Label Unlimited for a simple, because the potential of where we're going and the product range of what we can do and where we can reach is truly unlimited. So the name fits us much better. Brand has changed to match what we stand for now, and exciting times for us actually.
Exciting times for the group as a whole and for that investment that you hold in Cell C. Walk me through the plans there. There has been rumors that a listing is on the cards.
Yeah, I think the most important thing is that we're waiting for the opportunity, if I can use the word, split Blue Label out of Cell C out of Blue Label. And George Mendes and his team started, and they've done a phenomenal job since he started in July 2023. And it's given us the opportunity to make the next big move, which will be really worthwhile for our shareholders, really worthwhile for Cell C itself, and of course Blue Label. So we will, in one form or another, try and demerge Cell C and Blue Label. Obviously, one of the major things we're looking at is a separate listing of Cell C, and really let Cell C live on their own. I think the market's had enough of us together. I think the market can't understand us together, actually, just from the numbers and how complicated. So I think we as excited as them. But the end result will be a separate Cell C, maybe and probably in a listed environment, where their balance sheet is cleaned up entirely, their strategy is well accepted and known by the market, and of course a capex light model, so really good where they position themselves. And then you have Blue Label, in which you're talking to, where we now have 7 pillars, very clear of what we're doing in each of the pillars, and gives analysts and shareholders a great way of how to actually value Cell C, how to value Blue Label, and get the value out of both of them separately.
And just on Cell C, I'd like to get a greater sense of what you think of Cell C's market positioning, right? Especially in a market in SA in particular, where other telcos players haven't been faring well in the local market.
Yeah, that's a great question, because actually I finally really believe and buy into Cell C's strategy. I think in the past I understood it, but now I don't only understand it, I like it and I buy into it. I think Cell C's found where they want to be. They don't want to be a Vodacom, and they don't want to be an MTN, and for that matter, they don't want to be a Telkom, who is performing exceptionally well in the market at the moment, by the way, Telkom. What we want to be is we want to have a balance sheet that's clean, so very little to no debt. So it means we become a dividend yielding business, which is very attractive to shareholders. We want to become a capex light company, which we are. So as was been spoken about, how we got a mock-in deal with Vodacom and MTN, so we obviously don't have the capex that they do. We obviously really understand and want to be in the MVNO market, and I think we do that well. So I think for the most of it, we're not trying to be someone else. We're actually trying to be Cell C, and there's really a place for Cell C. I think it's good for the consumer. I think it's good for the industry. And finally, I think we found our home with our strategy, which is good.
All right, let's leave it there. Brett, thanks so much for your time and just taking us through the year that was for Blue Label. Now, that was Joint CEO at Blue Label, Brett Levy.